Welcome to Friday Takeaway. This week I look at two poultry stocks, the newly relisted Leong Hup International and its subsidiary Teo Seng Capital. But we start with US President Donald Trump, who after escalating the trade war last week has now ramped up the telco wars. He signed an executive order to restrict Huawei and ZTE Corp from selling their equipment in the US. And Huawei is now on a blacklist that could forbid it from doing business with American companies. In related news, foreign car makers like Mercedes and Toyota got a temporary reprieve after Trump, again, who else, postponed America's decision on car tariffs. That gives the EU and Japan 6 months to agree to a deal that would limit or restrict imports into the US in return for delaying new auto tariffs, because Trump believes that foreign cars present a threat to national security and hurts their ability to innovate. China's two biggest internet companies, Tencent Holdings and Alibaba Group, reported robust quarterly earnings despite the general economic slowdown in China, worsened by the trade war with America. But the duo signaled investment into new businesses, even as their core segments of e-commerce and video games mature. Alibaba is building up its food delivery and cloud computing units, and Tencent is exploring financial and business services. Both in turn are also investing aggressively into China's cloud computing sector. Back home, the government has set up a debt management office effective immediately to help reduce Malaysia's financial burden. Chaired by Finance Minister Lim Guan Eng, the DMO will do things like getting the cheapest interest rates and coupon payments, and restructure existing bonds and borrowings to save finance costs. It will also formulate strategies to reduce the government's debt and liability burden. The DMO's members include Bank Negara Malaysia Governor Datuk Nor Syamsiah Muhammad Yunos, the Securities Commission Executive Chairman Datuk Syed Zaid Alba, PNB Chairman Tan Sri Dr. Zeti Akhtar Aziz, and the Accountant General Datuk Saad Esa. In this week's This or That, I take a look at two poultry stocks, the newly relisted Leong Hup International and its subsidiary Teo Seng Capital. The question is, if you are looking for exposure to the poultry stocks, which would be the better bet? Leong Hup, flush with IPO funds looking to expand regionally, or Teo Seng, which saw net profit for first quarter jump over 230%. So let's find out more. Leong Hup International is one of the largest fully integrated producers of poultry, eggs and livestock feed in Southeast Asia. It's the freshly restructured face of Leong Hup Holdings, a mainboard listed company controlled by the Lau family that was delisted in April 2012. Leong Hup controls two listed companies, the egg producer Teo Seng Capital and the Indonesian integrated poultry player PT Melindo Feedmill. The IPO for Leong Hup was the largest in Malaysia since Lotte Chemical Titan in 2017, raising 275 million ringgit to help it grow in the region. A strong IPO could have been due to one of its cornerstone investors being Louis Dreyfus. Louis Dreyfus is one of the world's biggest traders of animal feed, rice, oilseeds, sugar and coffee. Now they joined billionaire Tan Sri Kwek Ling Chan, the EPF, AIA Group and Maybank, and RHB and Tan Sri Chua Ma Yu in investing into Leong Hup. Operationally also, they were strong, reporting first quarter earnings before its IPO, which grew 15% to 60.5 million ringgit. Public Invest Research said that key risks for Leong Hup include forex fluctuations, its dependency on the price and availability of raw materials, the constant supply of genetics for its newly hatched chick breeding business, and a dependence on qualified and trained labour in Malaysia and Singapore. 5 broking houses including Public Invest, Interpac Securities, MIDF Amanah, JF Apex and TA Securities have covered Leong Hup and offered target prices on the stock. The median target price is around 1 ringgit 35 cents. Leong Hup's debut started out strong but pared gains amid a sea of volatility. Based on the current levels, there is a potential 20% gain in stock. Teo Seng Capital has 3 business segments: trading of pet food, trading of medicine, and poultry farming. They also specialize in healthcare solutions offering anti-parasites, antibiotics, disinfectants, feed additives, pesticides, supplements, vaccines, and pet food. Leong Hup are Teo Seng's parent with a 2.3% direct shareholding and 51.37% indirect ownership. This means that shareholders probably move their money to Leong Hup upon its listing for more direct exposure to the poultry side of the business. And true enough, the positive price action at Leong Hup on IPO day saw an opposite and downward reaction at Teo Seng. But Teo Seng are profitable, In its last earnings announcement, it paid a 3-cent dividend payable on June 26 after reporting that first quarter net profit more than tripled to 22.1 million ringgit. Poultry farming revenue rose on stable selling prices of its eggs and improved production efficiency. Plus, Teo Seng are a beneficiary of a strong dollar, as 74% of their earnings are US dollar denominated. Only one analyst covers Teo Seng from Malacca Securities, according to Bursa Marketplace, and that offers a hold recommendation with a target price of 1 ringgit 38 cents. Based on what it's currently trading at, that means a potential 9% gain in store.